Welcome to a daily stock review of Rigel Pharmaceuticals. The goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. This is my investing process. Today I'm going to tell you how I came across this stock and the 5-minute check to see if it's worth looking into further. These are the guys I learn off. They did pretty well for themselves over just a little while, and by following the breadcrumbs they've left behind, you should be able to follow in their footsteps. If you like the free investing resources that I wish I had when I first started, investing checklists, valuation calculators, etc., you can check those out with a link in the description. It's free. It's my gift to you guys. Let's get started. Rigel Pharmaceuticals Inc. is listed on the NASDAQ. Looking over the last 5 years, it's had some ups and downs. If we look in the last 12 months, even then, majority of it's been sideways action. And then if we go back to max, so we go back to 1st of December 2000, we'd have I know for stock splits and adjustments, but in short, there must have been a fair whack of hype around it back then. Biotechnology was a big thing, and pharmaceutical businesses and things like that. And for it to go not survive, technically it survived, but pretty much to have a 90% drop in your share price and maintain that for the next over 20 years, almost 30 years, is pretty insane. I think you could rate this as a poor investment choice if you'd made it back then. However, let's see how these guys are going now. Now, how to come across it. I'm currently doing a screen for small cap businesses, so anything with a market cap of below $2 billion that has high revenue growth over the last 3 years, and that actually has some profits coming through the business, because from that screen, there's about 90 and 95% of the businesses in there are terrible, and they're probably realistically at this stage, there's a lot of hype around the stock, but in the hope that it actually produces something meaningful, like cash at the end of the day. That's how I came across it. Now, let's jump into this check. Now, I wanted to have a look at the annual report. So I've literally just typed in Rigel Pharmaceuticals annual report. It's popped up. Cracked it open. Now, I want to have a look at the financial statements. All right. Now, I just did another business review that just highlighted the importance of, pardon me, still struggling with this cold, of not reading through an annual report in its entirety and focusing on just a couple of key points, the real needles of the business, first, to save you time. So if you're interested, you can check that out on the channel. So product sales. All right. So it's in thousands. So we're talking 104 million to 144 to 231. That's some pretty nice growth. And this is in product sales. So contract revenues from collabs has gone from 11 to 34 to 62. That's some pretty good growth as well. Cost and expenses. Whoa. Okay. So, cost of product sales. So usually for, businesses that have, physical products and things like that, it costs a large percentage of their cash that they get in sales to pay for the products, but not pharmaceuticals. All the hard work's done in research and development, R&D, getting it over the line into intellectual property, and then starting to mass produce it. And sure, these cost of products has gone up, but it's gone from 7 to 18 to 19. So it's starting to taper off, and there's some really good margin from those product sales. Now, where's the rest of the money going? Research and development. We'd expect that. Business wants to be ploughing, like pharmaceuticals, wants to be ploughing a lot of its time and money and effort into that. Selling, general, and admin, wow, it stayed pretty constant. So usually, if you've got product sales that have more than doubled in that time, usually selling, general, and admin will have gone up in not lockstep, but definitely at least 50% increase, but it hasn't, which is nice. Means that these guys should have a pretty reasonable control over their costs. Now, interest expense, let's just have a look at the bottom line. Net income. So they made a loss in 2023 of 25 mil. Then they're positive 17 last year, and then they're up to 367 million this year. So where's all the rest of that come from? Benefit from provision for income taxes. So realistically, that's a non-cash charge, which we should see in the cash flow statement. Should come back out, and we'll have a bit more of a normal number to look at in terms of cash. Now, what about the assets of the business? Just want to look big picture. Total assets, 500 million versus total liabilities, 122. And do we have any debts? We've got leases, which is fine. Acquisition-related liabilities. All right, no debt. So even if they did, I just want to have a look at the trend of it. Is it rapidly increasing? Is it getting a little bit smaller, or is it just staying flat? All right, let's have a look at the cash flow statement. I want to see what's happening inside the business. So we've got our net income at the top which is the bottom line of the income statement. We then have these adjustments. So all these non-cash charges, which including that deferred income tax benefit, gets subtracted from it because it didn't use up cash and it didn't produce cash. So that all that crap comes out. And we've got some adjustments to like other bits and pieces that happen through the year. Doesn't look like there's any big one-offs, which is what we want to look for besides this other one-off charge, which is release of cost share liability. But we can see that's subtracted from it, so I'm happy it's more conservative, even if it was. And we end up with our net cash provided by operating activities, which has gone from minus 5 mil to 31 million to 75. So that's a pretty good trend. I'm liking that. What are the capital expenditures that these guys have to actually do, or purchases of and proceeds from sale of property, plant, equipment? That's all negligible. So literally that is pretty much all free cash flow at the end of the day for the business. 75 mil, that's pretty nice. Now, how is this? So let's just have a look at some quick math. This business produces 75 million. Now that net income was pretty high. And that was this figure here, this 367. Now, majority of that was this non-cash charge, which needs to come out. So it's overinflated the earnings of the business for this year. That's how this PE ratio is calculated. It's grabbing the current price divided by that earnings figure for the last year. So if that earnings figure is really big, it just means this ratio gets smaller, and that's why we end up with 2.6. Now, for a business though that is producing 75 mil in cash, and it's got a market cap of 10 times that, we can use that as kind of another yardstick for price to earnings, and really it's price to free cash flow. So price to free cash flow, that kind of number is a lot more of a higher quality number because your earnings can be really high and you can produce literally no cash at the end of the day. It's cash is what shareholders want because that's where the business can either reinvest that, provide dividends, etc. So we'll come back to that in a sec. So where's the money on the business being spent? So we've got these short-term investments and purchases of short-term investments. Pardon me. So ploughed the rest of the money into that. So it looks like they've just tried to increase their cash equivalents at this stage. Net increase, decrease. Oh, it's technically short-term investments, so it's not included in cash and cash equivalents. So it goes there, but what they've done is it just means that they've got this money there that's in a couple of different buckets that they can grab out when they need in the future. It just happens to be not classified as cash and cash equivalents. Alright. There's nothing else crazy that comes through here that I can see. The business doesn't need to invest. It's not... what are we doing here? Net proceeds from issuance of common stock from equity plans. Okay. So it hasn't been buying back shares. It hasn't been providing a dividend or anything like that. So, and it's held onto it. So really, if I'm doing a deep dive on this business, I really need to try and understand management and what their history is. At this stage, the business probably hasn't got to the stage where it's been profitable and making some cash. I'd have to go back and check that trend over time. What else can we say? I think that's probably the most interesting bits and pieces there. So what does that mean here? Coming back to this. So we've got free cash flow of 75. The management team haven't decided how they're going to spend it at this stage unless it's written in the report, which we'd find out on that deep dive. And we've got a market cap of 784. So at this stage, it does look like, big picture wise, that the business is undervalued. Can present an opportunity to purchase it while it's below that. But it all depends on the growth expected and kind of what we expect the growth rate of the business to be in the future. Do we still think that they're going to be punching out 75 million cash flow next year and on an ongoing basis? So what we really need to do is try and understand that revenue that they're making and see what the quality of that is. So have they mastered their customer, etc.? How long are these patents and other bits and pieces that they've got on for, and go from there. Now you can see that even if that has come online back here, that news has kind of fallen on deaf ears, which can be a good sign, because it can mean that by doing a bit further analysis, coming up with a price that's conservative but as accurate as you can be, and then at least directionally correct on the value, and then make a decision to invest or not invest. That's what we want to try and do. Finding opportunities that are downtrodden and, you know, probably had a history of burnt expectations can be really fertile grounds for finding great investments. All right. If you'd like to check out those other videos with the other small caps, you can check out this playlist or check out this next video because YouTube thinks you'll like it. Cheers.